Friends and family, what it do? As always, yours truly, Joe Che. Today we are going to be breaking down why you need to be buying the fear and selling the greed in the market. You can be doing this on a daily, on an hourly scale, or you can look at the market on a monthly scale or even a weekly scale, and you can make these huge moves, okay? All by seeing when the market is overbought and then when the market is oversold. Let's hop onto the chart. Alright, so just looking at the Bitcoin chart from right here, we can see that there have been waves in the market. Alright, I'm looking at the monthly view for Bitcoin. Let's look at the weekly view to break it down on a little bit of a smaller scale. Alright, so just looking at it, we can look at this impulse that it has made since 2020 has started. Okay, we went from a low of 4,300 all the way up to a high of 65,000, and then we've pulled back here. So we can see that the market has broken itself up into 4 stages: hope, greed, fear, and regret. All right, so you have some hope in here when the market is rising up, and then you have some greed at the top of this market, and then you have some regret, and then the fear once we come back to the bottom. But this market cycle isn't the usual market cycle. And that's why I really don't believe that we have truly gone through the entire market cycle. I really don't think that this was the fear and the regret. And I really don't think that this was greedy enough to be the greed. So just going and measuring a little bit, just looking at the impulse move that we have made, we've made about a 1,300% move up, moving up 60,000 over the course of literally the past year and a half. All right, so maybe going back to where this impulse move started right here. Yeah, you're looking at 600% right here, 55,000, something along those lines. All right, but let's look at Bitcoin's history for a second. So going back to 2017 back here, we can see that there was the same kind of impulse move in the market. So just going back and measuring this one, from the low to the high, yeah, about 1,000%, and in almost half the time. So then also just looking back at history, seeing what Bitcoin does, we look back 2013 at the last market cycle before 2013, and we're gonna measure that. We're gonna see how this market moved. Now you can see where this is where things start to get interesting. Because you can see this huge market move right here, but then you can also see this tinier market move right here. And all of the analysis that I've been doing, everything that I've been learning with the trading community that I'm a part of, is kind of pointing towards that in 2021, we are right here. We are at a much smaller level of increase with a much shorter pullback, okay? We haven't been looking at an 80% pullback like we have in most of the other, yeah, this was a 75% pullback from the top. Yeah, and a 1,600% increase up. But you can see that is the smaller, that 1,600, and then it goes into this big market impulse up. And then you could see that this is where the cycle starts to play out. You could see that there's a lot of hope right here, a lot of hope. And then there's a lot of greed. That's why the market peaks so fast and then tanks, okay? And then there's some fear, and then there's a whole lot of regret by this market moving sideways. And then you can even scroll in here to 2011 and see the same exact market cycle. So it's the first thing that we need to do when we're looking at these technologies is to always know that they're going to go through these huge market impulses. So now just going onto the logarithmic Bitcoin chart, I spelled that wrong. We can kind of see how this is an adoption of technology, all right? We can see the percent changes right here, but looking at the price chart in a logarithmic scale, we can see that this technology is on a curve of adoption. All right, so it is following this curve, it is going above it, it is breaking below it, but it's following the curve up. And so you could see these two yellow lines are good indicators on when there's a lot of greed in the market, when it is at the top over here, and when there's a lot of fear in the market, when it is lower than the average logarithmic scale. So just going back to the chart, you guys can see that every 4 years, or in this case, every 2 years in the first 2 years of Bitcoin's history, it makes these really quick impulses up and then drags out the impulses down, okay? Because Bitcoin is made for the majority to lose, all right? So even though the price is going up extreme here and people should be making tons of money, not the smart people aren't getting in here below 5,000, below 6,000. Everybody's getting into the market when it gets over 10,000, when there's a lot of hope and when there's a lot of optimism inside of the market. So everybody ends up buying in, holding all the way up until 20,000, like they did here in 2017, and then they might even buy more at 2017 or at 20,000. They might be like, wow, like Bitcoin's going to 100K like right now. But of course, that isn't what happens. The market has to make the majority lose, because that's how the rich people make money. So as you can see, there was a huge market sell-off here all the way back down to 3,600. All right, but you can see at the beginning of this market impulse, the coin was at 600, okay? So you might be like, wow, the coin went from 600 to 20,000 and all the way back to 3,400. How I like to look at this is the coin went from 600 to 3,400. Even just by using that increase, you would have made 400% on your investment. Of course, if you were trading this, it would have been a mess. But the point is that you just need to hold Bitcoin long term, and not just Bitcoin. It's Ethereum, it's Polkadot, it's all of these technologies. Because going back to the logarithmic scale, this is the chart for Bitcoin, okay? It's been around since 2009. It has had time to adopt. It has had time to grow. It has had time to become more stable than the rest. But look at the logarithmic chart for Chainlink. Look at the logarithmic chart for Polkadot. These technologies actually have use cases, not like Bitcoin doesn't, but Bitcoin is just super basic and only really used for peer-to-peer. But Polkadot is trying to build a closed decentralized internet, kind of similar to Ethereum, but more closed scale and more small. Chainlink is building, or like they already have them built, but they're building Oracle financial systems to help banks and kind of enterprises just store their financial information and be able to exchange it and transfer it and do whatever they need to do with their financial information. So these adoptions of these technologies are not far along. The max may be 4 to 5 years. So imagine where these are going to be in 25 years from now. Do you think when the airplane came out, everybody just hopped on an airplane and went flying? Do you think everybody was like, wow, like automobiles are a genius. Like I'm not scared of those at all. Like let's hop on the car and go 500 or 200 miles an hour. They sure as hell didn't, okay? There needed to be early adopters and there needed to be innovators in the niche. So of course, even just looking at this chart, you can see how the market cycle always plays out, and it will keep playing out because this is a technology. This is not a market. It is a market, but this isn't a stock. This isn't a business, okay? This is a technology, and it is going to follow the technological curve of adoption that all other technologies have used. You need to compare this to cell phones. You can't compare this to your Apple stock, okay? You can price-wise, but it's not even going to have the returns that Apple stock has ever had, okay? Because it's a technology. It's going to be adopted. Imagine how high it could be when if it ever gets the 90% use rate, all right? A 90% usage rate. So even just looking at even just going into what potentially could happen, if we have an impulse that is similarly sized to the old ones, okay? We just had a 600% increase here, but going up to like a 1,200% or a 1,400%, you're looking at over $100,000. And just thinking that if this market is actually doing what it did in 2013, we have 1 or 2 more months of a flat-ish market, a market that is going to be moving towards a bull run. So maybe over the next month or 2, we're getting back into the 50s and 60s and stuff like that. But then we're going to really start to see stuff take off late October, November, maybe even into December. And of course, this isn't financial advice. I'm not telling you to go sell your house and put it all into Bitcoin. I'm just saying watch this market cycle play out. And then after November, when you see Bitcoin crashing back down from 160,000, maybe put some short sells on it because you know that it is going to come back down to 30,000. You know that that's going to happen. But then when you see Bitcoin at 30,000 again, you know that you know that you need to buy Bitcoin after it's hit 200,000 and it's come back to 30,000, because it will never hit 30,000 again. Just like it will never hit 9,000 again, it'll never hit 300 again, it'll never hit $30 again. It will keep moving up and it'll keep proving everybody wrong, but with the majority still losing. It's that simple, guys. So I hope you guys understand a little bit about what I'm talking about, buying the fear in the market and selling the greed and not overthinking it, okay? When your grandma is telling you to buy Bitcoin and hop in on the trend, and it's at 150,000, probably don't buy it, because unfortunately your grandma is going to lose out because your grandma doesn't get education. Your grandma doesn't know about market impulses. Your grandma doesn't know about the cycle. But when everybody's telling you that Bitcoin's going to zero, Bitcoin sucks, Bitcoin's a failed project, you might want to buy Bitcoin, because unfortunately Bitcoin can't go to zero. It can go to zero, but unfortunately it won't go to zero. And it's going to continue to rise and continue to prove people wrong. So thank you guys for coming out here on this Tech Tuesday. Peace.